In this video, we'll talk about jumbo loans and jumbo loans in Texas specifically. So if you're looking to purchase a home and you need a jumbo loan, in this video, I'll break down the main things you need to know. We'll talk about the loan limits, the credit, the down payment, the reserves, and the rates. So if that's something you want to learn more about, keep on watching and let's jump right in. A jumbo loan is a luxury home purchase, right? So that's for homes. It doesn't have to be necessarily 2 million, but it's above the conforming loan limit. And right now in Texas, in Harris County, the conforming loan limit for convention loans is 647,200. So if you purchase a home and you have a loan amount that's bigger than 647,200, you are now in the jumbo world. And that changes everything, right? Because jumbo loans are not regulated by Fannie Mae or Freddie Mac, and they have their own set of investors and guidelines specifically that are set in place by investors. Okay, so because the loan amount is higher, there's higher risk, then basically the investors put in additional guidelines, requirements, small nitpicky things that they put in place that sometimes might seem that they're crazy and unnecessary, let's say, in the process. But these are additional guidelines that these particular investors will put in place. So when you pick a mortgage company, when you have a loan officer, make sure that they have good knowledge, great knowledge of the guidelines of each and every specific investor. A lot of good mortgage companies will have many investors that they work with. You can have, just like us, 10, 15, 20 different investors, and they can change so much by just the smallest thing. So if your credit score is 20 points off, if your down payment is not 10, it's 15, or if your back-end ratios, with jumbo loans, the back-end ratios are tighter. They're usually around 41 to 43%. So if you're off on anything, you might not qualify for that specific investor. And for those guidelines, you might have to look at a different investor. So jumbo loans are a little tricky, but I like to compare it to a puzzle. It's just another puzzle. It's just another puzzle that has more pieces, right? So make sure you find a loan officer who likes to do puzzles, because not everybody is good at them. When it comes to your credit, obviously the higher the credit score, the better, right? But anything above 680, it's something that we can do. Anything below 680, it's not impossible, but it's going to be very, very hard and more restrictive. The higher the credit score, the better. When it comes to jumbo loans, I think a lot of times we run into a situation where we have people that are making good money. They're paying cash. They're not really using any credit cards and things like that. And it turns out they don't have any credit cards or credit at all, or they're an authorized user for somebody else. So you can't be an authorized user. You have to have, well, best practice would say have 2 or 3 different trade lines, have them open for at least 12 months and in good credit, good standing. Basically, the investors want to make sure that you have a good credit history, some kind of credit history, that you're, making payments on time, and anything above 680 is doable. I would say if you can get it into the low 700s would be ideal. But, credit score, minimum 680, anything below that would be very difficult to find. Not impossible, but very difficult. If you have a 720, 740, that puts you in a whole different realm. And there's basically more investors to choose from, right? So if your mortgage company, the loan officer is working with, let's say, 15 different investors, maybe there's a few that do 680 credit score. But if you have a 720 or 740, now you have all of them, the whole 15 or 20 investors. So there's definitely more to choose from. And obviously, the higher the credit score, it's going to impact also later your interest rates, which we'll jump into shortly as well. So what is the down payment requirement on a jumbo loan? Well, you could technically find a jumbo loan with as little as 5% down. But for the most part, the most common and best option, I think, would be at least minimum 10%. And that basically, it gives you more options, more investors to choose from. The smaller the down payment, the lower the credit scores, the more trickier the file will be, the more harder it will be to actually get it closed. So I think that I would recommend doing maybe at least 10% or more. You could do 15 or 20, obviously would be better. But do 10% down on a jumbo loan. That gives us, the lender, more options, more investors to choose from, right? So, and one of the other things that kicks in with down payments, different down payment amounts, is the amount of reserves that are required. So if you do 10% down, you might be asked and required to have 12 months of reserves. If you do 20% down, maybe that reserve requirement drops down to only 3 to 6 months. And this is also a good segue to reserves. What are reserves on the jumbo loan? Because these are not required on other types of loan, right? So if you're doing an FHA, conventional reserves are not really needed. So a reserve are additional funds left in your accounts, so additional assets left after the home is already purchased. So after you close and fund on the house, you have additional funds left as in the accounts, and they're called reserves. Reserves are for your principal, interest, taxes, and insurance. So your full mortgage payment with taxes and escrows, that's your 1 month of reserve. So after the closing, we want to make sure that you're not house poor, right? So you purchased a home. We want to make sure that you have, let's say, an additional 12 months of reserves. That would mean that if something were to happen, you lost your job, you still have an additional whole year of funds in the accounts where you can make the payments on time. So if your down payment is 10%, you might be required to show 12 months of reserves. Now, these reserves do not have to be in your checking and savings account. We can use retirement accounts. We can use your stock accounts. You just have to have access to additional funds if needed. Now, if you do 20% down, then the reserve requirement might change to just 3 to 6 months, right? So you close on the house, you purchase the home, you have additional 6 months of reserve. So if something again were to happen, you can pay up to 6 months of your mortgage payment. So that's the requirement when it comes to reserves. After you purchase a home and you put less than 20% down, you have to have something called and pay for the mortgage insurance, which is insurance for the mortgage company, for the lender, just in case if you were to default on the loan. So whenever you buy a house with less than 20% down, you have to have mortgage insurance. And the most common ones are the monthly mortgage insurance. And then the other one we see more often on jumbo loans is the one that's factored into the rate. So you can go with a slightly higher interest rate, put 10% down, and not have any monthly mortgage insurance. Are the rates higher or lower on jumbo loans? Well, that depends, right? So this is where it gets interesting. It all depends on the investor and which specific guidelines, which box you fit into, right? So one investor will have one set of rates, and then if you don't fit in that particular scenario, you might have to go with a different investor. That investor might have different rates. So when it comes to jumbo loans, when I compare them for clients to conventional or jumbo loans, if they're like close in the loan amount in the sales price, it really depends. I've seen over time, I've been doing this for 11 years. We've had situations where sometimes the jumbo loans are better than a conventional. Sometimes they're not. Sometimes they're the same. So it really depends. And the last thing in this video I wanted to add is a disclaimer, is that keep in mind that all of these guidelines change. Okay. We saw crazy changes in the jumbo roll during COVID. So make sure you always check in with a local professional, talk to a local lender, see what the most up-to-date current guidelines are. I hope you find this information helpful. If it is, please make sure to smash that like button. If you have any questions, you can reach out to me or leave them in the comment section. I'll answer any questions. And then, of course, if you're purchasing a home here in Texas and need help with the jumbo loan, I'd love an opportunity to earn your business. So call me, text me, shoot me an email. Again, don't forget to subscribe, and I'll see you in the next video. Watch this video over here, and I'll see you soon. Thanks for watching.